Hey everyone, welcome back to Business Brain Rot, where we break down the wild world of global finance without the fluff. It's October 14th, 2025, and holy smokes, the markets are in freefall. China just slapped a massive ban on U.S. shipping firms, and U.S. Treasury Secretary Scott Bessent is firing back, saying Beijing will hurt the most if they don't back down. We're talking trillions in potential damage, tech supply chains on the brink, and a full-blown trade war escalation under President Trump. If you're invested in stocks, shipping, or just worried about your gadgets getting pricier, this video is for you. I'll walk you through the chaos step by step, straight from this bombshell Fortune article. Hit that like button if you're feeling the market pain, subscribe for daily deep dives, and let's jump in. Alright, let's set the stage. Just yesterday, markets were riding high on rumors of a Trump-Xi summit at the APEC conference later this month. But today, total reversal. Global stocks are tumbling across Asia, Europe, and pre-market U.S. futures. The trigger? China announced sanctions banning its companies from doing business with 5 U.S. subsidiaries of South Korea's Hanwha Ocean. Yeah, that massive shipbuilder. Why? Their ties to Washington. This isn't just a slap on the wrist. It's a direct hit at U.S. shipping routes and global trade flows. As the article scrolls down here, boom, right in the intro, it's all tied to the escalating U.S.-China trade war. Beijing's not stopping there. They're rolling out new export controls on rare earth materials. You know, those critical minerals that power everything from your iPhone to electric car batteries and wind turbines. The U.S. is heavily dependent on China for this stuff, so this could jack up prices and snarl supply chains in tech and energy big time. Now, enter Scott Bessent, Trump's Treasury Secretary. In a fresh interview with the Financial Times, check this out, it's embedded right here, he didn't hold back. Bessent says China's moves are a sign of how weak their economy is, and they're just trying to pull everybody else down with them. His mic drop line? If they want to slow down the global economy, they will be hurt the most. Oof, he even called China out for being in a recession/depression and desperately exporting their way out. But wait, the data's mixed. China's exports actually jumped 8.3% in September, and the World Bank's forecasting 4.8% GDP growth for the year. That's beating the US's measly 1.4%. So, is Bessent bluffing? Or is this the real pain point for Beijing? Let's talk numbers because that's where it hurts. As of this morning, S&P 500 futures are down 0.87% after a 1.56% pop yesterday. Europe's stocks 600? Down 0.47%. Japan's Nikkei? A brutal 2.58% drop. China's CSI 300 shed 1.2%. South Korea's Kospi, home to Hanwha, fell 0.63%. And even India's Nifty 50 is off 0.42%. Bitcoin dipped to $111,800. Scroll here to the sector breakdowns. Shipping stocks are getting hammered by the Hanwha ban, disrupting U.S.-Asia routes. Energy, screwed by rare earth shortages for renewables. Tech, your Magnificent Seven, Apple, Nvidia, Microsoft, you name it, could see chip prices spike. This sell-off's broad-based, folks. No safe havens today. So who is getting hurt the most like Bessent claims? The article's crystal clear. China. As the world's biggest supplier, any global slowdown boomerangs back hardest on them. They're exporting like crazy to dodge their slump, but these bans? It's like shooting themselves in the foot. Other experts chime in too. Pantheon Macroeconomics warns U.S. consumer spending could flatline to near zero growth by year-end, down from 6% earlier. Goldman Sachs drops this gem in their jobless growth note. Future U.S. GDP? Mostly from AI productivity boosts, not jobs, thanks to aging pops and immigration dips. And LPL Financial reminds us, half this S&P bull run? Powered by just 7 stocks: Amazon, Alphabet, Apple, Broadcom, Meta, Microsoft, Nvidia. Fed rate cuts and tamed inflation could keep the party going long-term, tariffs or not. Oh, and side note, 1/3 of polymarket bettors think a U.S. government shutdown drags past November 8th. More uncertainty? Check. Bottom line? This trade spat could slow global growth, spike costs in shipping, energy, and tech, but it's China staring down the barrel, per Bessent. Eyes on that potential Trump-Xi meet at APEC end of October. That could be the off-ramp. What do you think? Bluff or bust? Drop your takes in the comments, Smash like if this helped navigate the chaos, and subscribe with notifications for tomorrow's update. I'm signing off. Stay invested, stay sharp. See you next time.